Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. Like always, we'll start with the light crude oil futures market, which over the past week was also bullish, taking over the momentum that we saw the week prior, as price basically found support at the 5,800 level around here. In last week's video, we talked about why there was a very good reason for price to bounce off of this area. First, we had this wedge pattern, this short-term wedge pattern form over here, and if we zoom out just a little bit more, we can see that we're actually bouncing right off the mid-range of a very important and obvious consolidation box from back in April 2016, and that box is right here. So you can see we had a very, very clear box with a lot of consolidation, a lot of tightening and squeezing going on around here before price ultimately broke to the downside. And if we stretch this area, the mid-range of this area towards where price bounced recently, we can see that that lines up very, very well right around with the 5,800 level. Obviously, we talked about this resistance coming in from the wedge pattern as well. So ample reasons to believe why price would just bounce off of this the 5,800 level. We also had that sharp momentum towards the downside as price was accelerating into the level. And we've talked in the past about why and how that's important when price is usually looking to bounce off important areas. So that said, the bullish activity in the market just continues as price continues to trickle higher, again closing in at this more recent swing high that we created at the 6,600 level. Obviously more longer term areas for this market for us continue to be around the 7,500 level, where we have some very, very important long-term lows from the past that may come in and start to act as resistance for price. So those lows are around here. See some very important swing lows, and this level around here is a 7,500 level that we're actually watching as a more longer term target for this bullish activity for the light crude oil futures market, and that's where we believe and continue to believe that price is eventually headed. So the next market we're going to be looking at here is the S&P 500 E-mini futures market, which was also for the most part bullish over the past week. We did see a couple of days when price tried to pull back into the recent move up, but it was really short-lived, and Friday once again closed bullish, creating an overall upbeat impact for this market over the past week. In our last week's video, we talked about these very important two bar lows that are sticking out here, and how they're going to be very, very fundamental to ensure if the uptrend is to continue, or if we're going to see more extended bearish activity. We talked about how if these two lows were broken to the downside, price had pulled back, found resistance at this former support area, and just continued down, we could have seen a more extended move towards the downside that may have been reminiscent of more than just a pullback into this very long-term uptrend. On the contrary, we said that if these two lows hold and price just continues to trickle back higher, we could well see the resumption of this uptrend eventually, as price is able to at some point break this more recent high that we created just underneath the 2,900 level. And we seem to be inching towards that possibility more and more. We're also starting to see more regular sized candlesticks here, also possibly indicating that the volatility that we've seen over the past couple of weeks as the market was shocked into a major burst of selling over the recent past is that the market is now transitioning back towards a more normal market behavior, which is good to see. Going forward in the following week, if we continue to see more regular sized candlesticks and market action that slowly inches back towards this more recent high, we would likely have a reason to believe that we may eventually actually break this major resistance here and continue our way back up towards more all-time highs for this market. If that scenario doesn't play out, we may actually just see price also chopping around this range, this rather wide range that we now have in play, marked by the floor created by these two bar lows around here, and obviously this more recent swing high that we created for this market. until price moves towards one of these areas and looks to break out in either direction, we'd rather just consider this to be a market that we're going to be watching from the sidelines. It's a good sign, like we said, that the candlesticks are now starting to be more normal in terms of their size. There are no major wicks coming in, which actually suggests that market action may just be transitioning back to more normal. So going into the next week, if this regular action continues and we see price continue to trickle in one direction, that will help in allowing us to once again set a bias for this market. Okay, so the next market we're going to be looking at here is the gold futures market, which over the past week was bearish as price continues to bounce and react to this rather thick yet important resistance level over here. We've seen multiple occasions in the past when price was able to bounce off this area quite effectively. We noticed in our last week's video that even though this level has been very important for this market, the frequency or rather the increased frequency of price returning back to this level over the recent past could be an early indication that we may possibly see a breakout to the upside. We noticed how the initial few touches to this level resulted in a very strong move away from this level, a very sustained move away from this level. Then we pulled back to this level over here. Once again, an initial bounce was good enough to create a good selling impact for this market. Over the recent past, however, we've been coming back to this market a little bit more frequently with the selling pressure clearly not as strong as in prior occasions, and that may possibly be an indication that we could actually be getting into some kind of a wedge pattern here, and where indications point that we may actually see a break to the upside. That remains or continues to remain to be seen, as last week we once again saw price bouncing and reacting to this major resistance here, and we're once again moving towards the downside. For us, for this long bias to play out, an extremely important role is going to be played by this again a rather thick support and resistance area around here. If price continues to hold if price continues to hold as support at the 1300 level, and this rather thick support and resistance area will continue to hold an upward bias for this market. So for example, if you see market action where price pulls back to this level, holds a support, and once again pulls back to this level of resistance that we initially marked out, again we have that same scenario strengthening where we're saying the price is returning back to this level more frequently now, and the sell side pressure upon price touching and hitting this level is not that great anymore. That'll just hold true again, and will probably be more in line for that ultimate breakout to the upside. However, on the flip side, if price pulls back to this support and resistance level and actually breaks it to the downside, pulls back and holds its resistance and threatens to continue its way down, then we may have an alternate situation play out here, where we would once again probably believe that we do have some major selling coming in at this resistance, and we could well see a sustained move away from this resistance level as price then tries to inch closer towards the 1240 swing low over here, and some intermediate levels around here as well. So the following week's market action will probably be more or possibly more indicative of which of these scenarios is more likely to play out for this market, and we're going to be watching out for that. Okay, so the next market we're going to be looking at here is the Euro futures market, which was also bearish for the last week as price basically found a lot of resistance at the 1.25 round number, and former horizontal support and resistance level as well. If we zoom out the chart here to indicate the importance of the 1.25 level, we can see that it basically lines up with some indications of former support and resistance coming into the market and when the market was downtrending heavily. If we go further back, we can actually see that the market is possibly not only straddled at the 1.25 level, but may also be straddled at a rather at a rather thick horizontal support and resistance level around here that basically encompasses all the price levels between the 1.25 to roughly the 1.28 level. So we've got a swing high created over here. We had a swing low around here. This is roughly the 1.27-ish area. If you stretch this all the way across, there have been also some very important swing lows a little bit higher, closer to the 1.28 level. So just by looking at the resistance the price is currently seeing at these levels, it could well be possible that the market is treating the 1.25 level as perhaps the lower bound of a rather more longer term and more significant an extremely thick and heavy support and resistance level that may not be very good news for bulls here at all. So that said, if that scenario is really the one that's impacting market action right now, we have a very, very interesting development for this market. So we're talking about a very thick zone at play around here that is basically followed by another rather thick support and resistance level for this market that could well form the floor for a more elongated sideways period of movement, possibly to come in the future for this market. So we're seeing resistance come in around the 1.25 level, which if is the lower bound of a very significant horizontal support and resistance level that is thick in nature, and prices to continue down, we could actually come into contact with another similar thick horizontal support and resistance level that is also straddled with some extremely important instances of price bouncing off of that area as well. So like the gold market, this is going to be an interesting development over the following weeks, because it will be interesting to see which side here will tip over and allow price to create a more sustained move in one direction. So we're unsure at this point if we're going to continue our way up and possibly break and test this entire horizontal support and resistance level, possibly at some point break the 1.28 level, pull back to this level, hold the support and continue our way up, or we're going to see market action that drags further down towards the 1.18 level around here and test all of these this major horizontal support and resistance level. Until then, we'll probably just continue to be watching this market from the sidelines. Okay, so finally we look at the 10-year Treasury note futures market, which over the past week actually closed a little bit higher than it opened. And although not entirely surprising, it's definitely a little bit disappointing for us to see the lack of strong selling pressure come into the market. And the reason for that is that we've been following this market since it broke out of a very, very important swing low and support area around here. We had two occasions where price had basically bounced off this level extremely hard. Then we witnessed price sort of break to the downside, make an initial pullback, a very neat initial pullback to this level, hold as resistance, continue down. Then we saw a spike to the upside create over here, more due to fundamental reasons than technical reasons. And then we once again saw price basically holding to the tick at this extremely important level, which once again restored our belief that there's probably more sell side activity to come into the market. Currently we're seeing that price is basically holding as support at the 120 round number, and that is to be expected. Round numbers more times than not, in fact very often, will act as standalone price points that create support and resistance in the market. Aside from that, we've also been talking about a more longer term perspective, where we brought into perspective this consolidation box from back in 2011 and 2012, and we've talked about how price, although it's basically broken out of this support area, is actually going to be headed into this consolidation box, and as price approaches more towards the mid-range of this consolidation box and some of the more shorter term support and resistance levels that are contained within the box, it may actually just continue to jump up and down, and that's precisely what we're seeing here. Although, like we said, just the way that we saw price broke out of this support area over here, we were expecting a little bit more sustained and strong move towards the downside. But the recent nervous activity from the sellers here do not demotivate us to basically change our bias for this market, which continues to be to the downside, which means that we're eventually expecting price to possibly trickle down and probably hit this more important support area around here, which would also be the low of this consolidation box. And over the long term, of course, if we're able to break this level, the next areas that could be in line for this market could be the lows around here. So we're just continuing to hold a bearish bias for this market, even though the recent market action hasn't been very authoritative as far as bearish activity is concerned, although we're still just generally seeing prices lower for this market for the past few weeks.